The Bureau of Statistics says the April CPI indicator stayed at 2.4% annually, while the RBA's preferred measure, the underlying rate, ticked up slightly to 2.8%. But both are within the RBA's 2 to 3% target band and have stayed there for at least 5 months.
It shows that the progress that we've made together as Australians on inflation has been substantial and it has been sustained.
Temporary government assistance, both Commonwealth and state, has kept some prices down for now, including electricity, which the ABS says would have been 1.5% higher without the rebates. Petrol, meanwhile, is also down on this time last year. Other essentials, though, are rising and many above the rate of inflation. Fruit and veg up 6.1% annually, chocolate 5.4% and eggs nearly 19% more expensive, with shortages impacting supply. Rents rose 5% in the 12 months to April, but that's the slowest growth since February 2023. Medical and hospital services climbed by a similar amount, driven by health insurance premiums, while holiday and accommodation prices also climbed by more than 5%. Still, economists at Westpac say the overall result is consistent with the Reserve Bank's forecasts, but expect a rate cut after the more detailed quarterly CPI data, which will be out at the end of July.
It will give the Reserve Bank Board more confidence that inflation is behaving as, well, that it is coming down, and the risk of inflation reaccelerating is kind of diminishing, and that's why we expect the Reserve Bank Board to cut 2 more times this year. Whether they'll cut in July, I don't think anything in these numbers would be a red flag to the board and say we cannot cut if, for instance, there's a major shock to real activity coming from US announcements.
Westpac agrees with the RBA that global trade policies will be disinflationary.